Brandon Turner. Brandon Turner. Yes, Brandon Turner. Looks like he has come on the bandwagon and starting to talk about something that is very near and dear to my heart. He just put out a video talking about getting to 2 rental properties. If you know anything about one rental at a time, my goal is to help grow the middle class. I believe it's a very ambitious goal. I believe growing the middle class comes down to owning assets. If you haven't figured out over the last 4 or 5 years that inflation is a feature, not a bug, you're not paying attention. Especially if you can secure assets with 30-year fixed rate debt that doesn't change. The ability to have somebody else pay off your asset. The ability to use leverage to get all of the equity, but only put 5, 10, 20, 25% down. To have the big guys, first Pace Morby, then Ryan Pineda, and now Brandon Turner, talking about getting to 4, 5, in Brandon's case 2, I think is amazing. I think Brandon Turner has a special place in the real estate investing landscape. I think he carries a huge voice. And to have him in this boat now, I think is amazing, regardless of how I feel about Brandon, the person. If you know anything about me and One Rental at a Time, I personally don't like the guy. I have interacted with him decades ago, and it was no fun. But that said, 20 years ago versus what he's able to do today, all for it. If he wants to push the message of getting to 2, 4, or shoot 5 rental properties, I am all for it. I am all for it. So again, if you want to see that video, it is on his channel. Brandon Turner does have a YouTube channel. I'm sure he has a podcast as well. But yes, he just put out a video talking about getting to 2 rental properties. I do have a question for you, though. I really have a question. We have seen some of the biggest folks in the real estate game, in my opinion, take a very significant pivot. Maybe I'm seeing a boogeyman when one's not there, but there was a lot of people raising money, talking about buying trailer home parks or whatever they're called, mobile home parks, buying apartment buildings, raising money as GPs. It does feel like a lot of those people are all of a sudden talking about 2, 4, 5 rental properties. Is this a sign that it's hard to raise money for bigger deals? Probably. Is it a sign that assets aren't retrading? Probably. Is it a sign that they have realized they need to reposition to be relevant? Maybe. I don't know, but it's like, to me, it kind of feels like in the last 45 days, some super secret memo went out, which I didn't get. I didn't get a copy of it, but a super secret memo went out that said, hey guys, stop talking about 100 or 1,000 units. Let's go talk about 4 or 5. Again, I want to be clear. I welcome that. To have Brandon Turner, again, perhaps one of the biggest names in real estate investing, talking about 2 rental properties, I think is amazing. So go check out that video. Tell them hi from One Rental at a Time. And more people talking about fixing or helping grow the middle class, the better, in my opinion. Yesterday, I talked about doing a live inside our school community. Unfortunately, I couldn't get Zoom and school to connect yesterday, so I have moved that to Sunday morning. I will be going live Sunday morning, 8 a.m. inside school, just for our school members. I apologize for the confusion yesterday. I tried to make it work. It just didn't work. So I gave up and rescheduled for Sunday at 8 a.m. What's going on in the real estate market? The real estate market, again, Mike Simonson, Altos Research, great up-to-date data. Folks, it finally happened. It finally happened. Last week, Labor Day week was the first, or I'm sorry, last week, reported this week, but for last week, excuse me. Active inventory actually fell. This was the first time all year. All year, inventory has been building. Inventory fell for the first time last week. Again, not by a lot, but anytime the trend changes, you need to pay attention. So again, this is seasonal. This normally happens. I believe what we are going to go through, as I've said repeatedly, we are in a buyer's market. Buyer's markets don't last long. This one I think might max out at 9 months. But what happens? We are seeing demand, even as rates fall, not pick up. More on that in a minute. But we are seeing inventory age out. It's something that I've actually asked Mike and Logan from Housing Wire to look at is, what is our cancellation or expireds? Guys, I don't know if you know this, but when you sign a listing contract, it typically has a date that the contract ends. It could be 3 months. It could be 6 months. It could be another date, but generally speaking, 3 or 6 months. How much inventory is out there, had zero price cuts, and is still active after 90 days? You know what I call that inventory? Stale, wish pricing, not relevant. I am just curious how many listings that were listed in the spring they tried to sell during the summer will now fall out or expire. It's going to be a bigger number than most people think about. So again, active listings, according to Mike Simonson and Altus Research, down week on week. New listings, 69,000, down 6% year on year. New contracts, 64,000, down 2.5%. Price reductions at 40%. Folks, I actually want to know something. All of you, if you follow One Rental at a Time and you're doing the work, you have a buy box. You should be looking at your buy box every day. I want to know what percent of your buy box has days on market over 30 and zero price drops. So for example, if your buy box has 40 active listings and it has 15 listings that are over 30 days and 7 of those listings have had zero price drops, I want to know that data. Leave a comment below. I want to get a feel for how much bad inventory, because again, a lot of people are talking about this ramp up of active listings. But if 5% of all these active listings are fake, not real, it's a very different story. So maybe you can help me understand that. Again, how many listings are in your buy box? How many over 30 days? And how many have had zero price drops after 30 days? I think that'd be really interesting to think about. Got an update from Resi Club, Lance Lambert. Mortgage rates 6.4%. And as we called, again, something we got right was the refi boom. We called the refi boom a month before anybody else, and it is here. What do I mean? Refinances up 94% year on year. Now, again, folks, with percentages, you got to be careful. This 94% is obviously off of a really ugly number last year. I think we might have been in the 7.5 range last year. But again, refis up 94%. Excuse me. Also, apps to purchase up 3% week on week, but down 4% year on year. Again, I don't think people are in a rush to do anything. You will hear more about that later from some of the retailers that we're going to talk about. But yes, the purchase apps were led by FHA and VA. Again, we are seeing folks take advantage of this buyer's market. Again, we are operating in a world that's slower, so you would expect FHA and VA to have a leg up in this environment. So good on them. Again, I hope if you're following me, don't offer list price. We're not doing that. We're doing disrespectful offers. Most of you, myself included, want to do one deal a year. Don't pay list price. So I don't know if you saw it yesterday, but we had a great conversation with Anna Kelly. Anna Kelly and I see the world very differently. Anna Kelly is preparing for a deep, dark, nasty recession. where I am coming at this going, you know what? I think we're actually already in it. And it's going to be far more like a rolling recession. This is an important conversation. I would ask you to look at that video because you probably have to operate differently. If you are operating in a world where it's going to get deep, dark, and scary, you probably make different decisions versus a rolling recession. These are important economic things to think about. So again, take a listen to that video. Anna does a great job of sharing her thoughts, excuse me. She does think that by the summer of next year, we could be down to 2% Fed funds rate. Sorry, I feel like I'm coming down with a cold. So again, that is an important video. Go ahead and take a look at. Again, folks, remember I'm offering you a bonus to sign up and buy tickets for our event in Vegas in February. If you buy tickets this week, I'm going to give you last year's recording, which is a $100 value. Don't worry, folks. If you already bought your tickets, I will, of course, take care of you because that's what we do here. I don't want you to be punished for buying early. You will also get that. Man, I think I might be catching a cold. That's no fun. So again, if you buy the ticket this week, I will give you the last year's recording, which you will watch. It was a lot of good. Fed President Bostic, folks, if you remember our conversations about good old Bostic, he was a hawk. He was one of the, a hawk. He's now turned rather dovish. Fed President Bostic is saying, we can't wait for inflation to get to 2%. We can't wait for inflation to get to 2%. We have to watch the labor market. It does seem like they are declaring victory over inflation, and now they are turning to the job market. On the job market, we got our first of 3 jobs numbers. Today, we got the JOLTS report. Tomorrow, we'll get ADP and private payroll. And then Friday, of course, the big number of the week, non-farm payroll. JOLTS report was ugly. Was ugly. Let me get something to drink. Fun fact, after we closed on our Vegas house, this was the first thing we bought, or I should say I bought. I don't know, first thing I bought. There we go. All right, that's better. So again, we got our first jobs number. The jobs number was ugly. This is the JOLTS report. It was expected to come in at 8.1 million. Again, job openings. Last was 8.1 million. It was an ugly number. Came in at 7.6. If you want to round up ever so slightly, it would be 7.7. So a pretty significant miss. Almost 500,000 jobs. Job market appears to be weakening. Again, the JOLTS report probably not as important. ADP report would be more important, but again, non-farm payroll is the number to watch. Will unemployment tick up to 4.4? Will it tick down to 4.2? Will it stay flat? This is an important thing to think about. Want to give a shout out to Jared and Frank, who are running our accountability groups. Folks, if you're in real estate investing, or you want to get started, you need to join our school community because that is a place where now we have 256, 57 members all doing the work. But more importantly, there's an accountability group on Sunday and an accountability group on Wednesday. You want to be a part of those. They talk about things like, how long do you hold on to problem properties? Should you do older or newer homes? What is a buy box? Why should we go to the Vegas event? Again, introduce yourself. Don't make my mistake. The first 5 years, I tried to do it all myself. Something that I have learned by growing this channel and doing all these amazing things with amazing people is you gotta change your environment. I call it firing your friends. You gotta get new friends. You gotta get new associations. And there is no better place to be, in my opinion, than our school community. And more importantly, join the accountability groups. Be a part of them. Ask questions. They look at inspection reports. They do deep dives. And again, they bring other guests on occasion. The 10-year note after the jobs or the JOLTS report is down again. The 10-year note is down again. What does that mean? What does the 10-year note being down again mean? To me, I really think the market is pricing in a 50 basis point move in September by the Fed. Not a quarter. They're pricing in a half. Again, you know my feelings on this. I think they're being early. I think they're being greedy. But that doesn't matter what I think. The market is speaking volumes. So we're going to see mortgage rates fall. Again, folks, mortgage rates will fall in anticipation of a cut. Don't say, hey, look, the Fed cut 50 basis points. Why aren't mortgage rates down? They move early. They move fast. So that is coming down. Don't know if you saw this, but it looks like Nordstrom's family is going to take the company or take the retailer private. They're going to take the company private at $23 a share. If you take a company private, you no longer have to report to the street. You can do the hard things and you can grow out of it. It'll be interesting to see. Now on to retailers. Dick's Sporting Goods. Dick's Sporting Goods blew out their number. Beat top line, beat bottom line, raised guidance, but did issue this cautious statement. Retailers are bracing for the consumers are bracing for the upcoming election, and we do not know what the impact on spending will be. Folks, you've heard me tell you, people aren't going to buy homes. They're not going to buy cars. Now we have people selling sporting goods, telling you that the consumer, this election cycle, all of this is going to disrupt consumer behavior. Something to think about. Again, be a contrarian. I keep telling you this. Be a contrarian. When everybody runs away, go shopping. Disrespectful offers. This is your time. I like to shop. I like to buy assets when nobody else is buying. Just how I am. Again, Dick's Sporting Goods. Dollar Tree came out, lowered guidance after, Dollar General was ugly last week. I think they fell 25%. Dollar Tree cut full year outlook, citing this is weird. I got to ask you. This is actually a quote from their CEO, citing increasing pressure on middle and high income consumers. Have I ever been to a Dollar General or Dollar Tree? I don't think I've ever been to a Dollar Tree or a Dollar General. I have no idea. Do high income earners shop at Dollar Tree? Do they? I did not. Maybe I'm wrong, because again, never been there. But do high income people go to Dollar Tree? I mean, that didn't seem to make sense to me. But hey, I don't know. Looks like the lumberjack shops there, so he says I do, so that's funny. All right, cool. Maybe I'm just wrong. I'm ignorant. That is totally possible. Again, never been there. Maybe high-income earners do shop there. And then lastly, what I think all this is telling us is that Walmart got it right. Walmart made a huge transition to groceries, which you can think of as staples versus discretionary. So again, a lot of stuff going on. Again, I want to shout out Brandon Turner one more time. I want to say welcome to the club. I want to say anybody with the name recognition, the clout that wants to come on board and tell folks all you got to do is get to 2 or 4 or shoot 5 rental properties. I want to shake your hand, say thank you, thank you, thank you. We don't need 100. We don't need thousands. You just need a couple. If you want to keep going and go to 10 or whatever, there you go. Alrighty, folks, I want you to have an amazing day. Join school, buy your tickets to the event. Let's just have some fun together. We'll see you tomorrow at 7:30 a.m. Take care and bye-bye.